Hi, my name is Erdal Tekisalp, and I am a senior consultant with the Amdeya Group. Today we will look at why there is record Turkish residential real estate sales to foreigners, with emphasis on MENA countries. This presentation is divided into two sections. We will first look at sales to foreign investors and then the overall Turkish residential housing market. This first graph shows us the development of housing sales to foreign investors since 2013. Residential housing sales to foreign investors has increased over 5 times between 2013 and 2022. We can see that sales for the first 4 months have reached almost 21,000 units, the highest for the same period since 2013. As a result, home purchases by foreign investors are expected to surpass 62,000 this year. This is an increase of over 5% from 2021 and potentially a new record. With this graph, we can see that the percentage of sales to foreign investors when compared to total housing sales has increased substantially from an average of under 1% in 2013 to almost 5% for the first 4 months of 2022. In this chart, we can see the percentage of housing sales to foreign investors on a yearly basis. Sales to foreign investors have increased from almost 23,000 or 2% in 2015 to over 60,000 or 4% of total sales in 2021. If we look at the monthly development of housing sales to foreign investors, we can see that their share in total sales increased to an all-time high of almost 5% for 3 out of the first 4 months of 2022. The graph trend line also shows us there is a steady increase since January of 2020. The drop in monthly sales before June was due to the effects of COVID-19. The drop in the percentage of housing sales to foreign investors in June, July, and August 2020, however, was actually caused more so by the tremendous increase in domestic sales as a result of incentives provided by the Turkish government and not a reduction in sales to foreign investors. If we take a close look at the percentage of housing sales to foreign investors from MENA countries, we can see that there is a decrease when compared to the total of foreign investors, from a high of 46% in 2017 down to 24% in 2021. The following remarks are worth noting on this table. Among MENA countries, Iraqis have been consistently the largest buyers of houses in Turkey in the last 8 years. Saudi nationals were the second largest buyers of houses in Turkey for the first 5 years, then their purchases almost stopped entirely in the last 2 years. However, this could change significantly because of the improving atmosphere between the GCC countries and Turkey. This is especially so with the UAE and Saudi Arabia. Kuwaiti's purchases of houses in Turkey have remained relatively stable. They were the third largest buyer for the first few years and became the second largest after Saudis reduced buying substantially in 2021. Qataris were the fourth buyers among GCC nationals. UAE nationals were the fifth largest buyers before 2018 until they also reduced buying substantially in 2018. Among non-GCC countries, Jordanians have been the largest buyers, followed closely by Yemenis. Jordan nationals have been the fourth largest buyer among MENA nationals for the last 8 years. The figures do not reflect the dollar values of the houses being purchased. Thus, while Qataris may have been buying a smaller number of houses, for example, the value of these houses tend to be comparatively larger than the average value of a house. The figures show sales to buyers in their own names. However, many GCC buyers purchase real estate in Turkey through Turkish registered companies established for this purpose. The statistics are therefore not fully indicative of foreign purchases. If we look at where foreign investors buy real estate in Turkey, we see that 66% of foreign investments in residential real estate are concentrated in Istanbul and Antalya. This compares with only 23% of the total in these two cities by the much larger number of local buyers. There are several reasons for increase in real estate sales to foreign investors in Turkey. First of all, Turkey provides extensive choices for foreigners in all of the 3 types of residential properties which foreign buyers say they want in the country. These are holiday or second house, investment, residency, and/or retirement. Secondly, there's an oversupply of available properties. There has been an oversupply in housing units in Turkey in the last couple of years. The reasons for this oversupply will be discussed in a later slide. This pushes the prices of properties down in lira and US dollars. Third, the lira devaluation. The Turkish lira has been depreciating versus the dollar and other currencies since 2018. The devaluation makes prices of assets, including real estate, go down in US dollars. A separate slide will show the details of the devaluation. Fourth, low cost of living. The cost of living in Turkey is less than that in comparable European countries in the Mediterranean. Fifth, the low cost of real estate. Turkish residential real estate is generally less expensive than comparable properties in the European countries of the Mediterranean. Sixth, available services. Turkey has now established services that make living in the country comfortable. Transportation, medical services, and restaurants are of modern, good quality and relatively inexpensive. And finally, residency or citizenship. Owning a property in Turkey facilitates having a residency and/or citizenship. This next section of our presentation will look at the overall residential real estate market in Turkey. Turkey has a population of over 85 million with a growth rate of under 1%, and the average family size has decreased from 3.8 in 2011 to 3.3 in 2020. The estimate of annual new housing requirement in the country is roughly 800,000 per annum. So what does the 800,000 annual housing requirement include? First, it includes the population growth, obviously. Secondly, it includes urban transformation projects. Some sources estimate that 6 to 7 million units need to be reconstructed as they are considered to be housing at risk from earthquakes. And finally, it includes housing required for Syrian, Iraqi, and Afghan refugees. As of 2022, there are over 3.7 million registered Syrians and over 360,000 other nationalities. I'd like to point out that these are the official numbers of refugees. Actual figures may be much higher. This is an interesting graph which shows the development of supply and demand in the Turkish housing market. From the graph we can see that the convergence between occupancy permits and first-hand sales, which took place in September, has widened since then. You can see the convergence graph in the small snippet on the slide. The gap has widened because the number of additional new housing entering the market outpaced first-hand sales, even though there was a substantial increase in first-hand sales after September. We will look at the numbers behind this graph in the next slide. Annual housing starts averaged almost 826,000 units between 2013 and 2021, an increase to their highest level in 2017 at over 1.4 million units. This decreased in recent years to 320,000 units in 2019, 555,000 units in 2020, and 710,000 as of 2021. As a result, housing completions have also reduced during the same period to almost 740,000 units in 2019, 600,000 units in 2020, and 626,000 units in 2021. The main reason for this reduction in annual housing starts through the years, although there is an increase in 2021, is that first-hand sales of completed units have not kept pace with completions. As a result, cumulative unsold stock increased to 1.41 million units in 2018, increased to over 1.3 million units in 2019, and over 1.6 million units as of December 2021. In other words, roughly a quarter of all housing units completed between 2013 and 2021 have not been sold. This graph shows the development of total housing sales in the Turkish market between 2013 and 2022. When we look between 2013 and 2017, there was a steady 5.1% compounded annual growth rate. In 2018 and 2019, there was a general economic slowdown, plus a 40% devaluation in the Turkish lira against the dollar, and a 71% increase in the consumer price index to over 20%, resulted in a decrease in overall purchase by Turkish citizens. In addition, there was a significant slowdown starting in March 2019 through May 2020 due to COVID-19. But the government, with the help of state banks, supported purchases through mortgages with subsidized interest rates and longer tenors. This resulted in an 11% growth and a record year and a record month in July. However, this was not sustainable, and mortgage rates increased again, and mortgage sales as a percentage of total sales dropped when government support ended. More recently, the Turkish lira devalued against the dollar by 60% between September 30 and December 31st, 2021, from 8.4 to 13.4. If we look at the last 2 years in detail, we can see the effects of the subsidized interest rates and longer tenor starting in May 2020. As mentioned previously, this resulted in 11% growth and a record year. As you can see from the graph, in July 2020, mortgage loans as a percentage to total purchases increased to 57% from historical levels of around 15 to 20%. We can also see the effects of the 60% devaluation, which made real estate cheaper in terms of foreign currency between September and December 2021, as sales reached an all-time high of over 226,000 units on a monthly basis. Finally, this graph shows the change of the Turkish lira against foreign currencies between 2010 and today. The cumulative change between 2010 and May 29, 2022 is 960%. The change is even greater today with the exchange rate at 17.3 against the US dollar. A foreign investor can expect to find very good value in the residential real estate market in Turkey for the coming years. This is whether the investor buys the residence as a holiday or second house, for investment, or for residence. This is because the main reasons that have caused the record sales are expected to continue. The oversupply of available residential houses in Turkey is likely to continue for some time. Moreover, the Turkish lira will probably remain undervalued, although the rate of its recent decline might decelerate. The attractiveness of Turkey as a comfortable second residence is expected to endure. However, the location of an available property remains the most important determinant of good value. Thus, a property with a prime location in Istanbul, for example, might still command a high dollar value, notwithstanding the lira devaluation. Thank you for watching this presentation.